Uh, so obviously today's discussion is really just about international companies who come to the USA often can be surprised about how the insurance market works here. It's quite different to other jurisdictions. So we're going to talk about that, talk about the kind of insurance that you are probably going to need if you're thinking about coming to the USA. And obviously, I am based in Las Vegas, Nevada, so I'm giving a Nevada specific kind of view. And I know there are a lot of companies looking to come to Nevada, and there's a lot of companies that already have come to Nevada. So it's a very popular jurisdiction. So first of all, this is just a picture of the CEO when he gets his first insurance bill in the USA, because it's probably going to be 3 or 4 times higher what he's expecting it's going to be, he or she, because the way insurance is structured in the US, and because of a number of other factors that we'll talk about, insurance costs are just higher. And that is, probably a resounding message that you should take away from this presentation. Expect to pay more, unfortunately. Enough of that. So just a little bit of background about myself. My name is Geoff Taylor. I am from the United Kingdom, from England, London, England. And I just wanted to highlight some of my background because I'm very much a generalist. I've covered a lot of ground in my career. I started out in underwriting at Sun Alliance, then moved to the Prudential. I then moved from underwriting to being a risk manager, in other words, responsible for the corporation's risk management program. In some of those roles, not only did I look after insurance and talk about insurance and plan insurance, but I also did the environment, health and safety, business continuity, operational security, loss control in retail situations. They all reported into me. After some years and also some travel, part of my international credentials, obviously I'm from the UK, but I've spent time in the Middle East. I lived in Brussels in Belgium. I lived in Hilversum in the Netherlands. And then I moved back to London when I first joined Willis. And then they transferred me to San Francisco in California. And then I moved myself to Las Vegas in Nevada. So as you can see, I've got some extensive experience around the world. In the companies I've worked for, I've been very fortunate to be exposed to a lot of travel. So as far as Europe is concerned, I think I've been to every single European country except for Romania, Bulgaria, and the Baltic states. But otherwise, experience and talking about insurance to people in all of those European countries. That's enough about me, but just gives you a bit of background. As very much a generalist, so we will talk about some specific insurance products here. I'm not going to claim to be the expert in them, and I would always defer to an expert. But I am a point of contact. The way I work is I'm the conduit into our broking firm and to the market. I, get the right people in the room to get things done. So here's an outline agenda. And by the way, these slides can be available afterwards, so you don't need to take any notes or remember everything. But we're going to cover some of why the USA is different, and then some of the basic, or I would say necessary coverages that you need to consider when you're moving into a USA business opportunity. We'll talk about some of the things that can go wrong, and then what you should do if you are thinking about starting a business in the US or expanding the business. So first off, I think why the USA is so different to other jurisdictions. Well, there's a number of reasons, and some of them are probably not surprising to you. You've seen the TV series, Everybody Sues Everybody here. And that is actually not a joke. I know families who sue each other, parents who sue their children, children who sue their parents. This is a crazy situation. Even a small auto accident, you will be including lawyers and potentially court time. it's just a completely different environment. That basis of the system obviously creates some of the additional cost. I've highlighted three things here that I think are really important to remember. The first is that generally the verdicts in court cases are much larger than in Europe. I put, $1 billion plus. That was the glyphosate, which is a weed killer that was perfectly legal. By the way, was past all the regulatory hurdles. There was no actual direct evidence linking it to being carcinogenous, but it was enough for a jury to decide that $1 billion of damages needed to be awarded in this case. So these nuclear verdicts are something that you can expect, and even on a smaller scale, the cost of going to court in the US is very high. Even a pre-trial investigation could be $50,000. That's just getting depositions, gathering evidence. And if you go to trial, then it's probably multiples of that, from $250,000 to $500,000 for a simple case. So I emphasize the cost of the legal system and the way it works is dramatic. The other issue that drives up cost in the US is that it's not one country when it comes to insurance. Each state has its own set of regulations, has its own insurance commissioner, which, by the way, is a political appointment. That means that each state operates insurance in slightly different ways. Now, the big states like California, New York, Florida, Texas tend to drive the way the whole market operates, but each state has some quirks, shall we say. One of the things that you will see is that because each state has its own regulations, the way insurance is placed is different as well, because you come to me as a broker and I can place your insurance with what are called licensed admitted insurers within the state of Nevada or California or whichever state you have to be in. But if we want to access an insurer that's outside of the state that you happen to be in, and that might be because your business is one that's harder to place, typical things might be construction liability businesses or product liability where it's got a high hazard risk, will go into what's called the wholesale market. So there's a whole other set of insurance that is outside of what's called the admitted insurance. That means there's an additional cost to doing that. So again, that pushes costs up. The third point there is just frequency of litigation, which I referred to in the beginning. Everybody sues everyone, even for the slightest thing here. Part of that is driven because the way the system works is that lawyers work on what's called a contingency fee, which means they take a slice of whatever you win. That means you don't necessarily pay anything up front as an individual, but you will have your damages be shared with the lawyers. Quite different to, I think, most of the European systems. So that's sort of the background, why it's different. Regulation, court system, frequency of litigation. This is just a sort of a quick framework overview of what you will need to have in terms of coverage. At the top here, I've called it foundation. There are three lines of coverage. Two of these are actually required by law: workers' compensation and commercial auto liability. General liability is not required by law. However, you probably will need to take out general liability because every contract that you enter into, whether it's a lease agreement or a contract with a supplier or a customer, will have some contractual requirements around general liability. We'll go into each of these covers separately. Obviously, your assets need to be protected, so commercial property, inland, ocean, marine, or stock throughput for inventories coming into the country and being moved around. Specialty lines, which you probably aren't necessarily looking at in European jurisdictions, cyber liability, directors and officers and employment practices liability. Again, even if you don't have what you consider to be very much exposure, there are always important coverages to take out because they provide legal defense costs in case you are involved in a lawsuit that covers one of these areas. And we'll talk about each one separately. And then sort of catastrophe, but umbrella and excess liability. So this provides additional limits. So, for a smaller business, you might have $5 million limit of liability for your liability and excess workers' comp and auto liability. But for a larger business, you have to look at what your maximum exposure is and determine how high that liability limit goes. So I can tell you, from experience that some of the large casino properties on the Las Vegas Strip buy $500 million of general liability excess limits. So that's pretty big. I'll now move into, this is what I would do with a company coming in. I'd map out a kind of insurance program in a visual style. This has your sort of property and marine on one side, your umbrella in the middle, these liability policies where this excess liability sits above them, and then the executive and professional lines, which are the cyber, D&O, EPL, crime. You might consider kidnap and ransom, depends what foreign travel you're doing, and professional liability, especially if you're a service company providing advice for a fee. So kicking off first with, this is compulsory. You have to have it. In fact, you need to get it before you even hire an employee, basically. So as soon as you get one employee, one person on payroll, you'll need workers' compensation. It's a bit different in Europe. I think most European countries, workers' compensation is covered through the sort of public schemes. Medical is provided by public health, and compensation is provided through government schemes that help workers who are injured at work. That's not the case in the UK, where they have employers' liability that operates in a private market, and Belgium, which also has workers' compensation private markets. But a lot of the rest of Europe has schemes that are government-backed. That's not the case in the USA. And each state has its own regulations. Nevada is a state in which if you don't have this coverage, you could be held criminally liable, which is not something you want to do when you first arrive setting up a business. So this is absolutely vital that you step in. This is supposed to be an exclusive remedy. In other words, the workers cannot sue you outside of workers' compensation for injuries they sustain during work. One of the things to think about here is that workers' compensation, if you're the principal, it doesn't necessarily have to cover you, but I always advise that you should include yourself in it because you can access medical benefits and recover money against the insurance company. A number of factors here that you have to bear in mind as well is that your safety programs will create the right environment for you to have a good loss history, and that loss history directly affects your premium because there is something called an experience modifier, which each year is adjusted based on your claims, and that will put your premium up or down. And what you should know about that is that if you're, for example, a contractor, sometimes if you're bidding on work that's for the state or for even some private developers, they won't hire someone with an experience modifier above a certain rate. So it's really important to pay attention to safety programs and compliance with all the safety regulations. So that's a quick sort of overview of workers' compensation. As I say, compulsory, probably the first thing you need to do when you're looking at it. The general liability, this is for coverage that is for injuries that occur to not workers, but other third parties, and it could be on your premises or off your premises, depending what you do. And most of the policies, I mentioned there are two triggers, occurrence and claims made. Most of the time it's occurrence. That means that the initial incident has to occur during the policy period. But that also means it's really important that the documentation you get, you keep and you preserve, because you might have a claim that comes to you but is from an event that happened 2 years ago. So you need to keep all the policies. So I really strongly recommend a strong documentation and preserve a document policy in your company if you don't have one. This policy, for example, if somebody comes to your offices and they slip and fall on the, tiled floor in the entranceway, you could be liable for that, and they can sue you under the general liability. The other piece of it is products and completed operations. So if you're selling products and the product causes an injury to someone, they can come against you for that, and the products section of the general liability will respond to that. Completed operations is for if you're on site somewhere performing some work, you leave the site and then something occurs that was due to the work that you were doing, that can pick that up, and especially important for contractors as well. One of the other things here down in the left corner, additional insured requirements. As I said earlier, this coverage you will be required to have by contract in pretty much every contract that you enter into. This will ask the vendor or the supplier or a landlord or whoever will want to be named as an additional insured on your policy. What that means is that if they have a claim, they can submit the claim directly to the insurer. They don't have to come through you to access your policy. This is fairly typical, and often not only will you be required to add them as an additional insured, you will also need to provide a certificate of insurance. Certificates of insurance are really important, and you'll discover that you will need them to access job sites. You will need them to execute contracts. So again, general liability is not compulsory under the law, but it pretty much is required in order for you to do business anywhere. It does cover that contractual liability, as I said, and depending on the policy form, sometimes you can have automatic contractual liability. Sometimes it's a prerequisite that you disclose all the contracts, but these are important factors to consider in this coverage. Commercial auto, and then the umbrella and excess. So these policies, commercial auto, just a quick comment on the Nevada auto market, because there will be huge sticker shock on this. The cost of auto insurance in Nevada is probably one of the highest in the USA. As a foreigner coming to this country, you will find that even if you take a small, modest car and you buy a personal insurance, which I don't recommend, you should buy a commercial one, it protects your company. You could be paying $5,000 a year in insurance for a Toyota Camry, for example. So a very basic car will be very expensive insurance. It's very surprising to people. And by the way, the coverage on personal policies is limited and it doesn't cover work. So if you do have any kind of vehicles you use for your work, you should take out commercial auto liability. You should also know that in Nevada, the required limits under the law are very low. In fact, they're so low and they haven't been changed for years that they are completely inadequate to cover you for almost any situation. A commercial auto liability policy will probably come with a $1 million limit, which is good. And then what happens is the umbrella policy will sit on top of that. So maybe a 5 million excess of the 1 million, giving you $6 million of coverage in total for your commercial auto. There's a few things on the commercial auto. You can include people who are using their personal cars under a hired and non-owned vehicles extension. If you rent vehicles, sometimes you'll fly to a city, you'll rent a car. This policy can pick up that exposure as well, so you don't need the insurance from the rental agency. So there's a lot of sort of minor areas of exposure that will be picked up and covered by this commercial auto. If you don't have commercial auto and you choose a personal auto, you're very likely exposing your company to unwanted lawsuits. As I mentioned at the beginning, even a pre-trial can cost $50,000 in pre-trial expenses. That's not even going to trial. So these policies pick up the defense costs, so that's pretty important. So umbrella and excess, as I mentioned, this is really just adding limits, and I would recommend, at least one, depending on the size of your business, but probably $5 million of umbrella and excess limit, and it's just a necessary coverage that should be in place. Moving over to the asset side of the business, obviously property and marine. Commercial property, if you lease a building, often in the lease, you might be responsible for insurance, not necessarily the buildings, but any tenants' improvements that you put in there. So if you fit the building out, it might cost a few $100,000, you need to cover that. You're going to put desks and chairs in. Maybe if you're a manufacturing business, you're putting machinery and equipment in, racking. All of that needs to be covered under a property policy. The beauty of a property policy is they are very easy to access. There's good market for that. And they also add on business interruption coverage. So if you have a damage at your property and you can't operate your business, any loss of income you have over a period of time determined by the policy can be picked up under this policy as well. Nevada in particular, there's some interesting aspects because Nevada doesn't really have any exposure to what is known as natural catastrophe risks, such as named windstorm, earthquake, flood zones. We do have some localized flooding, but it's very well known where it is. And in general, the city has done a good job of creating flood defenses from flash floods. Earthquake in a Nevada policy is actually quite easy to add in because it's very low risk. And in fact, the last earthquake barely even moved the ground. So it's pretty important. One of the things to mention on the property policy is, and I've highlighted here, co-insurance. What that means is that if you don't sufficiently declare the right insurance value, you don't get paid out what you think you're going to get paid out. So say your property is worth $100,000, but you put on your policy $80,000 and you have a loss, you won't get $80,000. You'll get 8/10 of $80,000, because the way they see it, you are not declaring the full value. That's how they rate the policy. So it's very important to declare the full replacement cost value of the items that you have. When it comes to inventory, stock, and other work in progress and materials, that can be put on a policy with the property policy, or sometimes you might want to put it in the ocean marine policy. So anything you're importing, say from Europe, it's coming into the country, it can be on a marine policy. That marine policy can be extended to cover the property whilst it's in your warehouse under a stock throughput policy. These policies are very broad generally in coverage, and they cover end to end from leaving your factory in Europe to arrival customers' premises, or if the customer's collecting from your distribution in the USA. So that's the assets policies. Cyber liability. If you're not familiar with this, I'm not sure where you've been. We've all heard about dramatic hackings of databases of people's personal information. But what you hear less about is what's called network outage, which is if you have your systems hacked into, you may not be able to run your sales system or your distribution warehouse. You might have other factors that come into this. For example, there was a case in Las Vegas where the HVAC systems go down. Obviously, it becomes extremely hot, and then people can't work. And it was because someone hacked into those systems. Cyber liability is growing and growing. And in fact, right now, obviously with the situation in the Middle East, there's increased cyber attacks from state actors as well, or state-sponsored, targeting US domains. So you might not even think you're a target, but these companies, they don't care about that. They just go where they think it's easy to get a ransomware payment or to create chaos. Again, a policy, you don't need to buy this. It's not necessary. However, I strongly recommend it because, again, it's the kind of thing that you are under attack constantly. And with most of the cyber liability insurers, not only will they give you coverage, there'll be defense costs in addition to that coverage, but they also have often their own breach response teams. They have cyber security experts who can help advise you when you're setting up your systems. So they're very on the ball with the latest crime activity. So it actually adds a service to you. I would also recommend you get your own cyber security consultant when setting up your systems to ensure that they are defensible and constantly being surveilled, so that access isn't easily available to criminals and hackers. If you're in Europe, obviously you've got the general data protection requirements under the European Union, which are pretty broad. And if you're following those, you're probably okay. Most US states have slightly different laws in effect, but GDPR, actually being pretty broad, is going to cover you in most cases, but obviously a cybersecurity expert would be the way to go there to make sure that that's understood. Management liability, executive and management liability. There are two areas here that I focus on a lot: directors and officers, and also employment practices liability. Directors and officers is a coverage that covers the personal liability of a director of a company, because the general liability doesn't cover that, doesn't cover your person. If you're named as an individual in a lawsuit, the general liability doesn't cover that. And this is not necessarily about injury to people. This could be for shareholder disputes. It could be competition disputes. And the way it works is in the US under the state laws in Nevada, if you incorporate in Nevada, there's actually a very broad indemnification allowable. But I put the three aspects here. Side A is that individual coverage when you cannot be indemnified by your company. Side B reimburses the company that for indemnifying you as an individual. And side C is for securities claims in case you are looking for a listing in the US. I strongly recommend that you have this coverage, even as a small company. Having a small $1 million policy limit, it wouldn't be hugely expensive, but in terms of protecting you in case of lawsuits, it's absolutely vital. There's additional aspects to this that can add on fiduciary liability, which is if you're running a pension plan, depending how many employees you have. I think it's 40 in Nevada. Over that, you need to offer some kind of pension type arrangements, which are different from European pensions. These are basically savings accounts for employees. But when you oversee those plans, there's a liability that comes with that. Employment practices liability, you should have that coverage in here. As I said, litigation is frequent and popular, and employees frequently sue for wrongful termination, and they can put it down to being in a protected group, which could be based on race, ethnicity, religion, age, gender, and so it's rife for litigation. So again, an employment practices liability policy will defend against those lawsuits. If you're going to California, it's even more aggressive there. So I just add that in as an extra point here. So some mistakes I've seen when companies come to the US, they already have an insurance program in their home country. And that insurance program is probably very fit for purpose and it's great. And some insurers can say, well, we can cover your US operations. The problem is that those policies won't be admitted in the US. So you will still get fined or held criminally liable or sued, and you won't have any coverage. So absolutely get a US program in place to complement your global program. Workers' comp, I can't stress this enough. As soon as you're even thinking about getting an employee, you better be getting your workers' comp coverage in place. And as I mentioned there is no grace period. It's not like, well, we just hired them and we're getting it. No, not good enough. You're still going to be held liable. As I was just talking about EPL, it's just an area that is so different to, I think, particularly Europe. HR is very aggressive in the US. Hiring practices here are very different. Generally, we have at-will employment contracts, which basically means you can be fired immediately for no cause and for very little compensation, which then obviously creates more lawsuits. So EPL definitely should get that. Point 4, I mentioned the co-insurance issue on property policies, and I see it all the time. People are not realizing that replacement cost value is the basis of the insurance contract. So what you have in your accounts may be a written down number for your assets, that will not be adequate to meet your insurance requirements. Point 5, I mentioned auto limits. The statutory limits in Nevada are very low, and personal lines policies do not extend to cover commercial type activities. So buy a commercial liability policy with at least $1 million limit. Not appreciating the excess liability because of the high lawsuits. We work with our clients to create analytical tools to determine where those limits should be, but it's something you certainly need to do. And then 7, again, D&O. I see a lot of companies come here, think they don't need D&O, and a lawsuit arises and they have no coverage from their home policy because it doesn't have jurisdiction in the US, and the policy won't indemnify them for the US because often it excludes USA exposures. So don't make these mistakes. So what can you do? First of all, if you do have a program in your home country, should have an audit done of that program to identify where there will be gaps in coverage. I think pretty much everything I mentioned today, you'll find that you've got a gap in coverage and you'll need an admitted US policy. I think I probably mentioned workers' comp about 5 times. Sorry about that, but no exceptions, no grace periods. You have to get that as soon as you're thinking about putting someone on payroll. Just mentioned the umbrella excess tower. Let's work on that to get it right sized. If you're a small company, a service company, then maybe 1 to 5 million is acceptable. Any kind of manufacturing or distribution of products, depending on what sort of size of business you're thinking about, then maybe 10 million is a good starting point. Make sure your employment practices and D&O policies are in place, and property valuations. Let's make sure we've got you on the right track with the numbers there. And then my final point is definitely work with a local broker who is licensed in Nevada and has experience in international commercial, because you do have to make sure the local policies and the global policies fit together well. And not all the local brokers do very much international business, so you need to vet their credentials. So that kind of sums up what I had to say. I'm just going to switch back here. Okay, so I throw it open, Paulina, if anybody has any questions, comments, observations.
Yeah, actually, we have one question, and it's you can check below Q&A, but I can read it to you. It's up to you.
Go ahead, read it out.
Okay, so what are the biggest insurance mistakes you see international founders make in their first 12 months, and how can we avoid them without over-insuring too early?
Well, I think the last slide kind of covers the mistakes that frequently are seen. The best way to make sure that you're getting the right size program is to work with a broker that understands kind of the international insurance and the global insurance as well as the local insurance, because you want to absolutely leverage your global program. I mean, for larger companies, which I work for, we had very large global insurers, like a Zurich or a Chubb, who operate in pretty much every jurisdiction, and they're able to issue local policies for you. But that's a different decision-making process, but you need to understand it. And you need to make sure that if you're, say, with Allianz, which I know is a popular insurer in Germany and Poland and France and places like that, they have offices all over the US, so they can put together these programs. So often the global program can be extended, but you will still need to complement it with some local coverage. You can't extend a global program to cover local auto or workers' compensation. and likely you will need local policies issued on US forms, which are different to your European forms, which then creates what's called a difference in conditions issue. Now, sometimes that DIC coverage can be picked up in the global program on a non-admitted basis, but that means if you need to pay a claim in the US, you might not be able to transfer that money without incurring some kind of tax liability. I don't want to get too complicated, but it is complicated. So again, working with an experienced broker is the best way to go. Now, again, if your broker is like Marsh or, Aon or someone like that, they've probably got teams on the ground who can do all of that. But if you're a smaller business with a smaller broker, then I would definitely look for a US local broker, preferably if you're moving to Las Vegas, in Las Vegas. So you can always give me a call if that's where you're headed. But that's, I think, the only way to avoid the pitfalls is to work with a professional.
Okay, thank you. And we have another question as well. If a startup is initially testing the US market remotely or with only a few contractors, employees, which insurance coverage should be prioritized first, and which one can wait until the business scales?
So I would say in that case, you probably, depending how your global insurance program is arranged, you can probably get coverage under your global, but you might still need to think about some kind of general liability policy locally. But often, if you're only using contractors, so they're not employees, and they're defined as independent contractors, then they're not employees. You don't need workers' compensation. You don't need the other coverages. What you should do, though, is with those independent contractors, is define what insurances they need to take out. And you should, in those contracts, ask them to make sure that they have workers' compensation for themselves, that they have general liability, and they have auto liability as a minimum. And I'm not a lawyer, but I advise my clients on the kind of language that needs to go into those contracts. So you can protect yourself contractually in that initial phase just by making sure that those contractors or other suppliers that you're working with here in the US are carrying all of the right insurances.
Okay, and I think we don't have more questions than these two, but the webinar will be posted on YouTube with all the details to contact you.
Okay.
So if anyone will have more, they can write to you directly.
Absolutely. I'm happy to field questions, and if I don't have the answer, I always will point them in the direction of someone who can. One thing I would say, by the way, if you're just doing a sort of a small business opportunity into the US to begin with, there are some direct insurance companies you can go online and get quotes from. I don't have them all off the top of my head, but you can fulfill some of your insurance requirements quite economically, shall we say, through those direct opportunities for general liability and cyber and other things like that. But I always recommend working with a broker because you need professional advice, just like you would in any other professional space. Well, I thank everyone for listening, joining me on this little talk about what it's like to take out insurance in the USA. I hope I haven't scared anyone away. The business opportunities are real here. You just have to get it right to make sure that you're protecting your assets and your liabilities.
Okay, thank you so much for joining us, and have a great day, evening.
All right. Thank you, everyone.